Okay. Good evening.
Good evening, sir.
My name is Chia.
Mm-hmm.
Okay, and we're going to look at accounting this week.
Mm-hmm.
And in the next class, we
Mm-hmm.
will look at finance.
Okay.
Okay. Now,
Okay.
I'm not going to talk about um, how to do accounting.
Yes.
Okay. I'm going to talk about how to use accounting.
Mm.
I think that will be more relevant
Mm.
for you.
Mm-hmm.
Okay.
Mm.
So we will start with this PowerPoint,
Mm-hmm.
and we will look at first financial statement.
Okay.
Okay. I think it will be better if I put it at slideshow.
Right.
Okay. Now, at any time you want to clarify something, please do not hesitate. Please
Okay.
ask me.
Okay.
Okay.
Okay. No problem.
First, I want to introduce to you
Mm-hmm.
who are the users of accounting
Mm-hmm.
information. So you can see from this particular table, there are the various type of users.
Yes.
Okay, and you have their points of interest for individual type of user and why. Now, obviously, you are running a clinic,
Yes.
right? So if you are looking for investors to increase your share capital so you can expand,
Mm-hmm.
the investor will be looking whether they can get future dividends from you because they are investing money uh, in you,
Yes.
or they also want to know when they buy your shares, will there be a long-term increase in value? So
Okay.
certain things like cash flow, your profitability, and so forth.
Right.
Now, if you are a creditor, maybe you have a company supplying to you medical medicine, and if you are a big customer, sometimes they will extend to you credit terms. They don't
Right.
ask you to pay cash,
Right.
right?
Right.
And these creditors, they want to know whether can they get paid in the future by you,
Yes.
right?
Yes.
And also they want to look at their risk as a supplier.
Mm.
What is the credit amount they can give to you, right? And is there any risk associated with their continuous supply of medicine to you? So they'll be looking at your company liquidity,
Mm-hmm.
means can you pay? They're looking at your profitability. If you don't have profit, most likely you cannot pay them.
Mm-hmm.
And whether your company is going concern uh, in terms of business.
Mm-hmm.
Now, employees in your side most likely will not be any, but if you're going to have a locum that's coming in as a partner, he may wants to know whether is there going to be a long-term employment? Can you pay your salary?
Mm-hmm.
Or your customer will not be so much have a problem unless you may be a big hospital. So they are worried if they're going to get their surgery in your private hospital, they may have a claim against you, say something wrong with the surgery, right, and so forth. Whether can you pay them or not? Okay, and suppliers and so forth. Okay, so many people are interested in your accounting information. Okay,
Okay.
so how does the accounting information get about?
Mm.
Whenever there's a financial transactions, you buy, you sell, okay, you pay your expenses, you pay the salary or whatever things you buy a car or something like that. We call it financial transactions, and the documented documents will be like invoices, purchase, expense, salary. All this will be collected, and we will record it down, and then we give it to a thing called a trial balance. Maybe I talk about this a bit later. Basically, then we can prepare these two statement.
Mm-hmm.
The statement of financial position is an income statement that shows whether you're making a profit or a loss. Because
Mm-hmm.
don't forget, some of them are interested whether can you make profit or not.
Mm-hmm.
And the statement of comprehensive, statement of comprehensive Oh, I think this is the wrong typing. I make a mistake. I'm sorry. You will have an income statement, adjust it later on, and there's a balance sheet. Balance sheet will show what is your asset, whether you pay them or not. Okay, so now what does that mean? That means your documents should be accurate, on time, reflect a true and fair view. And in order to do that, you must get all your source document accurate, on time. Then the accounts can prepare correctly. And we will give you an example of an income statement. So I just extract, let's say, for example, under revenue, you may have patient service revenue, you may have some discount, to some company or something. Okay, so you have a rent revenue. You may have operating expenses like salary, medical supply, rent, malpractice, insurance, and so forth. Fees. So this is your total expense, and then this minus this will give you your earnings. And then you have your, if you have a bank loan, you have to pay some interest, and then maybe you got some income tax, right? So that will be your net income. Now, this is important because if you carry on making loss, you cannot pay your suppliers, you cannot pay your bank loan, you cannot pay your salary, right? So we like to see income statement always having net income.
Okay.
But then maybe a situation whereby you can have a net loss for a short while. Maybe you just started your clinic, and so you need to bear with it because at the beginning you don't have enough how do I say, patients coming in. Okay,
Right.
so I'm not going to talk very detail on this. You can see from this YouTube, right? Click on it if you want to know something more about your income statement.
Okay.
So basically, income statement is to show you, right at the bottom, what is your profit and the various breakdown, okay, of the items or category they come to this final figure. Of course, the government also interested. They want to charge you for income tax, right? Now, the other one is called a balance sheet. Okay, so there's a different category, asset and equity. So what are the current assets that you have, and what is the fixed asset? And this is the total asset. We split into current and fixed because this one will be recycled within 12 months. And other things you don't normally buy and sell monthly basis, like for example, you got medical or laboratory equipment, right? Or some furnitures. I'm not going to talk about depreciation. Depreciation, basically, you reserve some money so that you can, how do I say, you can save the money so that when the equipment is old already, right, you need to replace them. So this is the total asset. And basically, this total asset is financed by current liability and long-term liability, which is come back to total liability. What's the difference between current and long-term? You owe people, you must pay within 12 months. And this one, maybe you take a loan from a bank, maybe you pay slowly, but it will be more than 1 year. So this is minus this will give you the owner's equity, okay, or which is composed of the shares and also the profit. Now, what does that mean? We are saying that your company has got this asset and it is financed by liability and the shareholders' interest. So if you're a banker and you want to borrow money, right, and you say, for example, you want to borrow 500,000, the bank will look at it. Oh, right now you already owe people 140K. Is it okay or not? You will ask for 500K. So they will go back and see your profit. Oh, maybe you got 157K profit per year. Maybe you can pay back the loan and the interest. What happens if your cash is very little and your liability is a lot? Bankers will be afraid to lend to you, right? So therefore, the income statement and balance sheet are very important. Okay. Now, according to Malaysian law, your income statement and balance sheet need to be prepared at least once a year, and it need to be accurate. Now, if you're a sole proprietor, it's all right? You don't need to be audited, okay? But if you're a company, let's say, for example, you're Columbia Medical, okay? Therefore, the accounts need to be audited by an outside party to make sure that the income statement and balance sheet true view, or can I say true and fair view, because people are relying on your balance sheet and income statement to make this kind of point of interest, and that's what they're looking for. Okay. So having said that, most likely your accounts will be done by somebody, or you maybe having a software, so it's not an issue. The issue is that all these raw source document must be accurate and on time. You cannot make bluff one. Now, what happens if you make bluff income statement and balance sheet? You get yourself in trouble with the law. Okay, they can fine you, and also they can put you to jail. So there's another YouTube here for balance sheet if you want to know more about it. Now, the third one is called a cash flow statement. Now, when we say you make a profit, it doesn't mean you have collect back all the money. You may have some sales, right? And maybe the insurance company haven't paid you back the money, or insurance company dispute your claim. So another way to look is to look at the cash flow, your operating activities, investment activities, your financial activities, and there's a summary. So maybe, for example, you have a net income here, you add back the depreciation, increase in patent AR or decrease. You have a cash flow here, you purchase some new equipment, you're financing by getting loans, okay? Or you can pay back your loans, okay? Or you can take some money out as an owner as for dividend. So this will show you the cash increase, and the from this operating minus this figure, and minus this financing. Therefore, you have the net increase. So cash at the beginning and cash at the end. Now, you may have difficulty in preparing this, but most likely your accounting people should be able to prepare. Whether you have your own accountant or outside people who's doing a subcon for accounting for you, they should be able to prepare this cash flow and balance sheet income statement. Okay. Now, if you're a company, your accounts are registered with the registrar of company, or in Malay it's called SSM, Suruhan Syarikat Malaysia. Okay. So everybody can see your documents, and from your documents, the income statement and the balance sheet, they can make the cash flow quite easily. Okay. Okay. Since we have this financial statement, key is how to use them. Okay. So we call that financial ratio. Now, why do we use financial ratio? Let's say, for example, your clinic, maybe example, small clinic, okay? Now, can I compare you with Columbia Hospital? This basically is difficult, right? You are small and they are very big, right? But for ratio analysis, I can compare whether are you more efficient than them. Or maybe I can compare Columbia Hospital with, I don't know another hospital name, Assunta. Let's say I compare Assunta with Columbia. Okay. So I can use the ratio. Maybe Columbia is 1 billion sales, right, per year, and maybe Assunta is maybe 500,000. So it's still half. But if I want to look at efficiency, now why do I want to look at efficiency and profitability? Because if I'm the bank, I don't just lend it to somebody that is very big. I also want to know whether are you good in making money or not? Are you good in getting money? Are you good in reducing your costs? So that at the end of the day, you can pay me back, the bank, the loan and the interest. That's why we use financial ratios, and you should compare within the same industry. You should not take your clinic income statement and balance sheet to compare, let's say, for example, a shoe manufacturer, because they are different industries, okay? Because different industry got different criterias or different quirks or different way of doing business. So if you're on the clinical or medical, you should only compare with clinical and medical.
Right.
Should you compare with a company that's making medical equipment, let's say imaging equipment or X-ray? No, you should only compare your company with another company who's providing medical services. Okay, having said that, they are used to measure efficiency and profitability. Okay, so you can compare the strength and weakness of companies. Now, having said that, you can also compare the your financial ratio this year with last year, with the previous year, to see the trend of your ratios. Okay, you can also compare with another company, or you can compare back to your historical. Okay, so ratio will vary across different industry very, very much. Okay, so therefore you should not compare with a different industry, and it's important to analyze trends. Okay,
Right.
so there's a YouTube for you. So let's look at what are the financial ratios. Now, there are a few categories of financial ratio: activity, liquidity, solvency, profitability. We use this ratio to see how are you performing. If I'm a bank or an investor and you ask me to give you some money, right? I want to see, for example, your activity ratio for the past few years. And should I lend to you or should I lend to Colombia? I will look at Colombia ratio also. Then I will get a better picture, which is a better deal for me to lend to. Okay? So you have activity ratios, turnover, receivable, payable ratio, activity, liquidity, and so forth, solvency and profitability ratio. Now, what I've done is that I've given you the ratio, for example, activity ratio, the different type of ratio, how to calculate it, and certain remarks. When you do for your own company, okay, you can calculate the ratios. And look, you can also calculate trends and so calculate ratios and see, based on the ratio, you can do interpretation. Okay, and if you're calculating, let's say, for example, you're calculating your inventory turnover ratio or your asset turnover ratio, if I see the trend is getting better, oh, it's good. But if I see this data from your company is different very much from Colombia, and Colombia is much better than you, then I know the activity in Colombia is better than you. Now, why activity is important? Because the better the activity, can I say equal to productivity,
Yes.
equal to more profit.
Yeah.
Okay. So the next one is liquidity ratio. Now, this is a very important ratio because I want to know whether you have enough money to pay me back.
Yes.
Okay. Your suppliers are very interested. Do you have enough money to pay me back? Same as the banks. Okay. So these are various type of ratios. These are formula, and you can use this remark. If your ratio is below 1, you're not so good. Over 3 is also not so good. So there are certain things you can use to see. Okay. Now, solvency ratio is whether are you going to go bankrupt soon. Okay. So debt to asset, debt to capital, debt to equity, interest coverage. Okay. Now, what's the difference between a liquidity ratio and a solvency ratio? A liquidity ratio actually shows you have cash right now. Can you convert some of your people owe you money to cash easily? Okay, so that you can have cash to pay to run your business. Okay, basically in the short term, less than 1 year. Now, the solvency ratio is whether can your business survive more than 1 year. So if, for example, you have a lot of debts, right? So if I'm a bank, and if I see you have a lot of debts, and the ratio show very high ratio, I'm not going to lend you so much money.
Right.
Because when you have a lot of debts, you have to pay the debts, and also you have to pay me, right? So maybe it's not so good for me as a bank to lend to you. Okay. So the last one is the profitability ratio. Got quite a lot. So I split into page 1 and page 2. Gross margin, operating profit, and net profit. Okay, all these are various ratio. Now, this shows, especially for trend, is your ratio going down? Now, sometimes your ratio can go down because you give discount to generate more sales, right? So if you have a profitability ratio going down, but because you generate more sales, you make lesser profit, but you generate more sales, most likely you have more cash, right? Therefore, it's not so bad because it offsets. Okay, it offsets each other. But if I see your profitability ratio is going down and your cash is not going up, that is a warning sign. Okay, now you may have, I don't know, doctor, do you have a few branches? Now, if you have a few branches, what you can do is you can make cash flow statement, balance sheet, and income statement by branch, and then consolidate as a total company.
Right.
But if you got branches, you should do separate, so you can also compare their ratio, compare their trends. Okay. Oh, you have the other one, return to asset. What's the profit? Return on equity and earnings per share. How much people invest and how much they can get back from your earnings. Okay, all these are important ratios with remarks. So to make it easy for you, I give you an example. This example of a balance sheet and income statement, and you got all the A to BB. So I have shown you some ratios. So we will take some of this ratio, the important ratio, and I have calculated for you, and I show you how to do the calculation as a guide for you. Okay, so the key point is not looking at 1 year ratio, is to see the trend. The trend of your clinic and your trend of your competitors, if you can get their information. Okay, if you cannot get your competitors' information, it's still not so bad. At least you measure your own company, the trend analysis. Is the working? Is it amount getting better, getting lesser? And once you got this kind of figures, you can go back to the remarks site, okay, to see for yourself, and then you'll slowly learn how to do that. Okay, so far, can you understand what I'm saying?
Yes, yes.
So now, what will you do? Now, Doc, do you have one clinic or 2 or 3 clinics? I don't know.
Yeah, I have a few. I have another branch actually.
Okay.
And then I do other services also, like spa and what that event space. So
Services, that means you go to another private hospital, you give you offer your services and get
no, I don't go to other hospital, but I have another branch, and then I do spa as a yeah, clinic spa under one company.
Okay. So, in other words, you can split your accounts.
Yes.
So now you can compare, if you got another branch, you can compare branch A with branch B.
Right.
Right?
Right.
And how to do that is exactly what I say. Look at their the income statement, balance sheet. Now, your accounts, do you have an accountant, or you get people to do subcon?
I have an accountant.
Okay. Ask him to prepare the income statement and balance sheet. You can ask him to prepare it monthly. Okay. And ask him to prepare all this wonderful ratio, show the ratio to you, ask him to interpret, write you a report. Okay. Or if he's don't know how to do, then you better change the accounting people. Okay.
Okay.
Okay. Then look at the ratio and follow up.
Okay.
Okay. Keep in mind, it's not just leave it to your accounting and then they submit for the income tax department. Please use the accounting people more professionally.
Yes, yes. That's
Okay.
why I want to learn, because I want to know more about what is the clinic, how is the clinic functioning, like maybe every
Yeah.
month, so that I can towards the end of the year, if I know it's not doing well, and then I know I can do something about it.
Yes.
Yeah.
Okay. So so far you have any other questions before we proceed to the next one?
mm, nope. I'm good.
You're good, huh?
Yes,
Okay,
yes.
so we will proceed some more. Okay.
Okay, okay.
You can see the slide.
Yes.
Okay, I want to talk about budgeting.
Okay.
Now, of course, your accounting people right now are giving you the actual figures,
Right,
but the actual figure is the historical figures. Can you
right,
understand?
right.
Okay, it's not. I mean, they are showing the historical results, and historical means already passed already.
Right.
You cannot do something to amend or to correct whatever happened in the past because
Yes.
it's already done.
Mm-mm.
Now, what you need to do is to think about the future.
Right.
Okay, so we want to talk about budgeting.
Okay.
Now, I think you know what's a budget, right? So let's say you budget yourself uh, $500 per week to makan. So sometimes you overspend, sometimes you underspend.
Mm-mm.
Okay,
Mm-mm.
so you budget certain thing and you use the actual amount compare what you plan,
Mm-hmm.
right? Maybe if you overspend, maybe next month you have to underspend, right? Or
Right.
maybe this month you underspend, so you got some reserve, so next month you can overspend and so forth.
Right. Right.
Now, when you do budget, it's not like you wake up in the morning and say, okay, I will budget 10,000 for I don't know for I don't know some medical supplies, okay, for needles, okay, because historically needles is we always spend 1,000, so every month right now I budget 1,000. Anything above 1,000 I will ask why. Anything below I also need to know why. Okay, it's not like that, you know.
Mm-hmm.
I'm going to teach you a method.
Okay.
Okay, first you need to have a corporate vision and a mission. So maybe your mission right now is to provide medical services, right?
Mm-hmm. Mm-hmm.
And your vision is maybe you want to grow, maybe get 10% profit. You want to be number one clinic in, for example, in Shah Alam, you know.
Mm-hmm.
The problem is you wake up in the morning and you have certain things objective. It's okay, but it's not scientific.
Mm-hmm.
Or sometimes you see, hey, other people opening branches lah, so better I also open branches. You know,
Mm-hmm.
okay, or other people is making tons of money, so my vision was to make tons of money. It's not that.
Mm-hmm.
You actually must get the correct strategy. Okay,
Okay.
I will explain this one. Please bear with me. With the correct strategy, then you can make your market strategy, your product strategy, or in this case, your place or supplier, we call it production strategy. With these three strategies, you can make budgets.
Mm-hmm.
So your budget for manpower, for money, or machinery, or clinic, whatever it is, these are the budget that come from your strategy, that comes from the corporate strategy, that comes from your mission. Understand?
Yes.
So now, how do we know we are doing correctly for this area? Because if this area is not done correctly,
Mm-hmm.
this is not correct, and therefore this
Yes.
is not correct.
Yeah.
Okay, so therefore this process is correct. But many people will do this one first, and then come do here, and then come to here, and then it's not not aligned. So when you're doing budgeting, you cannot think about what you should spend or what you should spend or how much you should spend or when to spend. The question is what need to be done. Okay, so now I recommend you, I think OTSW. I think maybe you learned it before. Okay, this is the opportunity external you cannot control. Okay, this is the external threats that you cannot control. These are external. Okay, I will give you some example. Let's say you're the clinic, maybe you have good opportunity. If you are right now in Japan, a lot of people are sick, a lot of people are old, right?
Yes.
Right? A lot of people are also, therefore, you have good opportunity because more old people means more they will go to and see you, right? You may have a threat. For example, if you are right now in Indonesia, the young population, they don't get sick, so they don't come and see you, right? So this you cannot control. Or maybe there's a COVID right now. If there's a COVID right now, it's a big threat. Nobody want to come out, okay, to the house. There's no gathering, so lesser disease is flowing around, okay? But now let's look at the other one. This is your internal strength and weakness. This is you can control your company strength and your company weaknesses. Now, when you identify what is the opportunity and the threat, or what is the strength and weakness, you need to be no bias. And you need to have antenna, antenna, okay? You must know what is going on, okay? Now, it takes time, okay, for you to identify opportunity and threats, okay? So sometimes you identify 50 opportunity, you need to cut, okay? Because some of them are beyond you. And for example, there's opportunity that people are, weather is very hot, so people are going to buy more light clothes. Light clothes opportunity does not affect you, so that kind of opportunity must be thrown away, right? Okay,
Right.
So maybe threats in terms of accidents, so we need to have more safety boots or safety shoes. Those are threats, does not affect you. You only put in the opportunity and threat that affect your business. And your strength, and please be honest, what is your strength and what is weakness? So you may have many of them. Okay, now the key point is, if there's opportunity there, how do I use my strength to take advantage of this opportunity? That is where the strategy is.
Right.
And you identify what are the opportunity first, because you cannot control them.
Right.
And you identify what is your strength. So you use your strength to take advantage of this opportunity. When you think about it like that, that is where your strategy comes in. You understand?
Yes.
Okay?
Okay.
So it's the same thing. Sorry?
Yeah. Okay. Good.
Okay?
Okay.
So let's say, for example, there are some threats to your external threats. Okay? Basically, this one is controlled by political, economic, political situation, economic situation in your country or your place where you are. Maybe the social threats or social opportunities, right? Suddenly, everybody very interested in the flu shots. So this is opportunity for you, right? Or maybe it's technology. Okay, you may have an opportunity. Maybe you can get a very cheap MRI equipment or whatever it is. So do you have strength or not? If you have cash, then you can buy the MRI equipment, right? So these are the opportunity. So same thing, how do I use my strength to reduce the likelihood and impact of these threats? Then this I got weakness. How do I overcome the weakness that prevent me from taking advantage of this opportunity? And how do I overcome the weakness that will make these threats, okay, a reality? So in other words, you must be able to put in a few items. You can brainstorm the item first, right? Brainstorm the items and then take some of them that is not applicable. Now, I will show you an example how to do.
Okay.
Okay? Now, I was looking at a Malaysian clinic. Okay? So let's look at the opportunity, public-private ownership, Madani scheme,
Right.
telehealth expansion, aging population needs. Malaysia, a lot of people getting old like me. Threats, price transparency, okay? Ministry of Health registration, staff poaching, I think very common, right? And medical inflation, this is your supply cost. So You notice these are outside, beyond your control.
Right.
Now, maybe you have some strength, okay? Maybe your staff is multilingual. You have a strong neighborhood trust and agility. You can make fast decision. But maybe you got some weakness, maybe limited space, okay, beds, higher cost per unit for drugs, and reliance on the few key local doctors, right? Right. So you can see like this. So now, I think you can. I don't know this example whether relevant or not. Okay, I'm just giving you an example. I'm not in that business. Okay. So let's look at it. Let's look at it. So of course, you may have initially brainstorming, you got 10, you kick some away. It doesn't need to be 3, it can be 2, it can be 1, it can be 0, right? Okay, so it's up to you, right? You think which is very affect your business, okay? Then let's look at the SO, strength and opportunity. So what did we say? How do I use my strength to take advantage of the opportunity? So let's look carefully, okay? This is my strength and this is opportunity. So looking at this, I can make one strategy. Communicating community wellness hub. Use local trust to become a government-approved site for public patient dedicating. Don't worry about this, okay? Ensuring a steady flow of patient. Now, what is this? S201. This one. Can you see S2? Okay? O1. Now, I got a strength because I got strong neighborhood trust. And we have this public-private partnership. Now, I use this strength for this opportunity. And how do I use it? Maybe I use a community wellness hub. So use the local trust, right? To become the government-approved site for public patient dedicating. Understand? Ensuring a steady flow of patient. You understand?
Yes, yes.
Okay, so the same thing for this family doctor age, to cancel the threat. Okay, so now the problem is you may have 1, 2, 3, 4, maybe more, but you don't have enough money, you don't have enough time. You have to sometimes pick 1 or 2. Maybe next year you do another one. So normally, what would you do? Normally, you will always pick the first one because this is opportunity for you to grow. These 2 you can do, but which is better? Growing your business or defending your business? Right?
Right.
Oh, growing, isn't it?
Yeah.
So which is better? Growth is better than survival or defense? Right? No. Right? So if you have resources for 1, you do this one. Right? Maybe resources for 2, maybe you can either consider this or consider this. This one is the last one because it must be terrible. You must have very little, a lot of weakness, very little strength, very little opportunity, and a lot of trust. This is the last one. Okay? So now, only 2 strategies chosen due to lack of resources. So you can you see? Okay? So you can do this. Okay? And this is a formulation, and this is the description. So let's say you take these 2 as your strategy. Understand? Now, since you're going to select one of these, okay, let's say you just select one first class. For example, let's look at 1, okay? You're going to look at this one, okay? Based on this one, leverage the clinic strong committee to launch your telehealth monitor program. I'm not too sure about this, okay? I'm not too sure whether I have or not. Just for example, use digital to manage chronic patient remotely, ensuring consistent revenue, providing the human touch local patient value. So let's say look at this, okay? So this is your strategy. Now, based on this strategy, how will you now think about your marketing strategy, your product strategy, or when I use the word production, it's not the factory production, it's your clinic's physical strategy. Make the correct strategy to support this strategy. You understand?
Yes.
And once you have this strategy, now you will do the budgeting based on this strategy. So the budgeting process is not like so simple. Of course, you can just budget, and then you compare. But that's not the correct way to do. The correct way is to look at what is the
Strategy.
correct strategy. And the correct strategy can only be looked at if we're looking at OTSW. Okay? And from OTSW, which must be very honest, then you can do this one. And after you have done this one, you may have to select two. Now, sometimes this is a strategy, but you don't have resources for it. So you cannot do this one, even though this is the best. Okay? Now, you may not have the resources now, but you can get the resources very soon. Then you can continue with this one. But if you cannot have the resources now, and in the future also cannot get the resources, then you don't take this one. You take the next best one. That's the only way. So far, do you understand what I'm saying?
Yes.
So I'm not telling you how to make, what's the form to make a budget. Okay, I'm telling you how to make the budget. It comes from the very end. Now, sometimes, very funny, I'm going to tell you. When you look at and you look at your strategy, maybe there's something wrong with your mission and vision that you need to change. Let's say, for example, when the strategy come out and it conflicts with your mission and vision, and there's so little of this, there's a lot of this, you may want to go to survival by changing your business. You cannot become a clinic anymore. You may have to do a different type of business, pharmacy business, because the opportunity and strength and weakness dictate your mission and vision. Not your mission and vision dictate, you understand? Yes. But to do your mission and vision correctly, you have to look at this OTSW. And how often must you look at this? I suggest you look at it every 6 months. Minimum. Because things change. The political change, the economical change, the social change, the technology change. Don't forget, you are now a clinic. On one side is a supplier, on the other side is your customer. The other side is the market, the competitor. And then the other side is the government, the MOH, and all the regulation. You are actually somewhere in the center, bombarded by the regulations, bombarded by the competitors, bombarded by your supplier, keep on increasing price, right? And also you're bombarded by your customer, because customer got free choice, can go here and there, other clinics. So you're in the center under a lot of pressure, right? So the only way for you to think clearly is to look at your OTSW, and the better you're doing in your OT and SW, the better you recognize the key things in OT and SW, is the better you make your strategy, is the better you're going to do your budgeting. So your budget is going to be based on your strategies. Is that understood?
Yep.
Okay. I don't know if anybody teach you before, but this is the way that you should run your business.
Okay, good.
You understand, huh?
Yes. Very clear.
Okay, good. So when you done your budget already, I'm not going to teach you how to do budgeting. I think you should know. I want you to compare actual with budget on the monthly, yearly, look at the variance and look at the percentage. Now, sometimes the key point is, let's say, for example, salary, okay, may be up. Why is salary up? You have to look in detail. Overtime is up. Why is overtime up? You need to ask yourself. Oh, overtime is up because there's some reasons, and for that reasons, can we find a countermeasure so that the overtime will be up in the future? Okay, things like that. Okay, let's see. Why is it up? Can we find another service provider for cheaper lab fees, marketing, and so forth? So you need to check. And sometimes one area is no good, it's because another area is good. Okay, let's say, for example, we pay higher salary, okay, and it's no good, but our medical supply is better. Why? Because we pay more qualified nurses. They don't spoil the medicine. They don't throw away simply good medicine, or they misuse the medicine, overuse the medicine, disinfected or whatever it is. So sometimes the salary is up, but it can be recovered by cheaper medical supply. You have to think like that.
Okay.
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 So the same thing with balance sheet. Also, we can compare. You can also compare the variance and the percentage is to sales. Okay. And also, you need to look at your cash flow, right? The actual and budget. If it's very much out, not so good. Okay. So this is the accounting portion. Okay. I've done it so fast already. Okay. Have you got any question you would like to ask me?
So far on this topic is good.
Okay. Now, do you have any practical problems you want to share with me? So that I can, if you want, I can give you a second opinion or something like that.
Okay. Maybe I don't understand one thing is that share value, sir. When you have a company, right? How do you put it? You have partners, right? So
Huh?
you
Yeah,
have
okay, you have
partners, yeah.
partners.
So how does that really work? I mean, like the share value. Let's say it's 50-50, and then there's also what is your share equivalent to? Is it the lower the better? Like maybe put it as 1 ringgit as a one share, or the higher share is better. How do you get that number?
Okay. Okay, just wait. So I presume your partners lah, correct?
Yes, because I'm under
Okay.
Sdn Bhd.
Okay. First thing about partners, you better have a partnership agreement. Okay. In the partnership agreement, it will show who will contribute how much money and who will contribute, who will get what percentage of the profit. Okay. Now, you have cases whereby I'm rich, right? So I don't know anything about medical. Okay. So but I contribute money, make a clinic, you the doctor, you go and take care. Okay. So I contribute money, you contribute labor.
Right.
Okay. So if that's the case, you two must agree what is the share amount. No rule. You all decide. Okay, but then the doctor will say, okay, I will get maybe in terms of profit, I will get maybe 50% because I'm working.
Okay.
Right? The doctor say I'm working, so I get 50% profit. Then the rich fellow will say, no, 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 you can't even start working without my money. Right? So there's a goal of discussion, and then you all decide. And then sometimes the doctor will say, okay, at least I must have a fixed income. Okay, let's say, for example, I need to have at least every month 3,000 income, right? As a cost to the business. And after the net profit, we can share whatever percentage.
Right.
Okay. So you have to decide. Now, not only that, in the partnership income, you must decide, is it allowable to bring in new partners? What are the rules? Okay. What are the rules if any partner want to withdraw and close the partnership? If you are closing the partnership, how are you going to sell? Are you going to sell out all the asset and then share out whatever portion? Or maybe another person will take over. Maybe the doctor will buy over the rich fellow share, or the rich fellow buy over the doctor share, and then the rich fellow get a new doctor. And also major decisions, how is it to be decided? For example, you make some profit, the rich fellow say, I want the dividend. The doctor say, hey, I want to buy X-ray equipment. Right? So in the partnership agreement, there should be an arbitration clause. the clause is, for example, it means that if there is any dispute, okay, above a certain amount, then the clause will say you will appoint one arbitrator, not a court. An arbitrator is a referee. Okay, you can go to the Malaysia arbitration body. You can go there and they can recommend you a person, or you can put in the contract the arbitration council or the committee will decide. Okay, and what happens if one person die? The partnership will it carry on? If the doctor die, can the son who's another doctor carry on, and so forth, right? All this must be inside the partnership agreement. Now, having said share view, now share view, if it is possible, all those ambiguity, please put into the contract. Then you have lesser conflict. And whenever there is a conflict, put in the contract, it will be arbitrated. Now, what happens? Doctor say want to buy X-ray equipment. The rich guy say, I want to take my money out. Don't buy equipment. So you go to arbitration. And if the arbitration say, oh, must buy the X-ray, the rich man is not happy. He can still go to court to dissolve the partnership, as long as written agreement. So when there's a conflict of interest or shared belief or something like that, if it's written in the contract as much as possible, it reduces conflict. Now, share value means difference in opinion, and that is the conflict. Basically, I repeat, share value means differences in opinions or decisions which leads to conflicts. If there is no conflict, there is always 100% share value. But there is always conflict. Why? Political, economic, social, technical, behavioral, life cycle, age cycle, all creates conflicts. When business is up, you got conflict. When business is down, you got conflict. Right? It's everything as much as possible put into the partnership agreement. Now, what should be added into the partnership agreement then? As much as possible. What is as much as possible? Go to internet, ask them to give you a copy of, write a copy of AI, get a copy of partnership agreement that tries to eliminate all sort of potential conflict. That's the best I can say. Okay? If you ask me, how should I settle? If you ask me how should I settle share value, I would easily ask you put everything in the contract. Because things that are not contract means a question mark. A question mark means open to different interpretation. And when it comes to difference in interpretation, here comes the disagreement, the fighting, and both of you are not happy.
Yeah. Okay.
Sure. So now, if you are in that kind of situation right now, you may have to talk to your partner. Let's draft a new partnership agreement to put as much things. The important thing is to have the arbitration that both of you agree. Where to get the arbitrator? Go and get the Malaysian Society of Arbitrator as your arbitrator. Put it into your contract. Go and make a internet search. Go and visit the Malaysian Arbitrator Association. See how they work. Okay. Now, you in the partnership agreement, you don't need to put the arbitrator name. It will be arbitrator chosen by the arbitration society. But once you go to arbitration, the thing's already bad already.
Yeah.
Right?
Yes.
So the thing's already bad. See, the problem is you are friend, become a partnership. You understand?
Yes.
Later on, the father comes in, the mother comes in, the son comes in, the spouse comes in to disturb. right? Maybe they go inside the clinic and disturb. Maybe they're talking to your partner at home, right? So other people are coming in to disturb, because they can see there's some money. If there's no money, they don't disturb, right? Or there's a benefit for them, they disturb. And because they disturb, you and your friend initially good become, later on become enemies. That's where the partnership die. Okay? That's where the partnership dies. So put everything in agreement as much as possible, whatever scenario that you think will come out, right? And put in the agreement. And because there are certain things that cannot be quantified right now, or you can't imagine right now, you must have in the agreement and arbitration. That's the best way. I cannot say whether your view is better than your partner view. I cannot say your partner view is better than your view, but I can tell you how to eliminate unnecessary potential conflicts. Because there's an agreement. You sign, I sign. We follow this agreement. That's all. Is it okay with you?
Yeah. Yeah.
Have you got everything? Have you got a partnership agreement? I think so. Or no, don't have.
Don't have.
That's why
I
now
don't
you got
have.
conflict.
Actually, no conflict, sir. It's just that I am doing the business with my sister, but she doesn't have any involvement whatsoever. I'm just asking you so that I can see later on if I want to have a partnership with somebody. So the
Yeah, yeah. So
company
anyway,
so the
in
company now
the
is not an issue.
yeah, I already anticipate what you want.
Yeah.
Okay. So just wait. So this is next week class. Okay. Type of business. We got a sole proprietor partnership limited. Oh. Okay. Right. Mergers and acquisition. Okay. You may want to merge or you want to acquire another company. Okay. So I really expect some of these things will be coming soon. I also know some of the question that you may have to ask me. Different type of business, whether it's partnership or limited partnership, I will be taught in the next chapter.
Okay.
Or next classes. Okay.
Okay.
We still got time. I didn't know I can finish so fast. Is there anything else you want to ask me?
Another thing is when you calculate dividend.
Sorry.
Dividend. When
you have to speak louder. You know why?
Yeah.
Because your mic here must be put near to your mouth. Yes.
Okay. Is this clearer?
Yes.
Okay. So when you calculate dividend, you have to give it to the directors, right? In their equal share.
No, depending on the agreement.
Okay. So if the agreement is
provide the money, you provide the manpower, you all decide how to share. But if you are working as a doctor, maybe you want to have a salary also.
Right.
Correct? Right. Yeah. So everything is in the agreement.
So if the share is 50-50, when you have the
doesn't
let's
matter.
Say, okay.
Doesn't matter.
Oh.
So okay, in the agreement, the agreement will say the capital is 50-50. Okay, it's 100,000, you come up 50K, your sister come up 50K. That is in the agreement.
Okay.
In the profit sharing, it may be a different percentage.
I see.
Not necessarily linked to that.
Okay.
Because, for example, you work 5 days a week. She work only 2 days a week. You understand? So capital is the same, but your labor is 5 days a week. Her labor is 2 days a week. So obviously the profit sharing will be higher for you. Don't link. Agreement is every clause. Every clause can be have significance. You may have a clause on how to share the capital. You may have another clause that show that you will get a fixed amount of salary per month. You have another clause at the end of the day, the profit, how much is to be shared out. And also you may have a clause, 50% of the profit must not be taken out, must live in the company for future growth.
Right.
It can be anything, right into
Okay.
the agreement.
So this partnership agreement is totally separate, right? It's like where is it? Is it in? It's not in the M&A. It's not, right?
No,
It's totally
M&A
separate.
is the old company law. Okay,
Ah,
under Old Company Act, you have a thing called M&A, Memorandum Article Association. Now the new Company Act is different. They don't have an M&A. I think they have a word for it whereby they combine it. Okay?
okay.
But if you are having a partnership, you make a partnership agreement, get it chopped with the stamp duty. You get you can either get a lawyer to draft up the partnership agreement, or you can go to internet and get a template and fill in the information. That's all. Print it out, go to stamp office. They will say, oh, what is your capital? Okay, and then you will pay the stamp duty based on the capital amount. Okay, so the partnership agreement can also state when the partnership 10 years or 5 years, or the partnership agreement can say it will be dissolved. Partnership will be dissolved when one partner pass away, or the partnership can be dissolved due to mutual agreement to disband. Anything is up to you all to put the partnership agreement. Only companies got M&A. Okay, partnership have partnership agreement. Both are legal documents. So your company is a private limited company or it is a partnership?
Sendirian Berhad, sir.
Okay, that means you are a company. If you're a company, means your accounts need to be audited.
Right.
Right, you have an auditor. Okay,
Right.
so therefore you will have a M&A. Okay, a memorandum. Okay, you have a memorandum of articles of association. Yes, it should be written inside there. Okay, so if you have an MMA, the partnership terms, the information in the partnership can be put into the M&A.
Okay.
Now, when you go to bank and borrow money, they will ask you for a copy of the M&A.
Right.
So inside there, we can see what is the agreement that you have. Okay, so now, if it's written in the M&A, if the company go bankrupt, as a Sdn Bhd, the shareholders will not have to pay their own money. Only whatever the company money is used to pay back to the bank. If it's not enough, that's it. Sorry, bank. That's why you lend the money, right? And in return, the bank charges you for interest. So this is a business risk for the bank. So if it's a I think Sdn Bhd, if you're Sdn Bhd, your accounts will be audited, okay, and your M&A is open, so people can actually go into your ROC or SSM, right? Kelurahan, right? So they can see all your accounts. Now, since okay, another key point about auditing, since we are on it, you can negotiate audit fee. You can change auditors, of course. Okay, so when the auditor come and ask you, oh, I want audit fee, you ask why. They will say it's inflation. I need to spend more for my audit clerk. You tell the fella, the background is the auditors, external auditors always have new auditing people. And the new auditing people will come to your place and they take time to learn your system. So therefore have more long time. So they charge more. So you can tell them, when you send your audit clerk to me to do audit, okay, I want the experienced one. I want those who have done audit before, so that your hours will be lesser. And if the charge out rate per hour is the same, a lesser hours means cheaper cost to you,
Right.
means cheaper bill to me.
Mm-hmm.
So what you should ask your auditor, tell your auditors, I want the experienced people to come in. They can do their job faster. Therefore, you should be saving, okay, on the audit bill. Now, they will say, okay, inflation is this or that, you know. Normally, we will say, okay, if it's a 3% due to inflation, maybe you can increase. Or if you don't like them, in the annual general meeting, when the auditor proposed themselves to be new auditors, the board of directors can recommend another audit. Okay? Now, if you hire another new auditor, when you hire a new auditor, the auditor will say, okay, I'm a new auditor. I will ask the old auditor for all the former documents.
Yeah.
Now, according to the MIA, Malaysia Institute of Accountants, the old auditor should help the new auditors by giving them all their permanent files or whatever information they need. Now, the question is should, not must. So the old auditor may be angry, no more business, will not have their new auditors. Okay, that cannot be helped. But since the account has been audited, the previous year's account has been audited, so the new auditor can start from scratch.
Right.
Okay, start from scratch. Should not be a problem. I don't know who is the auditor, but you're a small company. I don't think you're using Pricewaterhouse or something like that. You're maybe one of the local auditors.
Yes.
Okay, so they should also get, if you are having the tax submission, get the same company. Don't have one company audit and another company doing tax. Right? Because if you have different company, the tax people must go and look at the audit paper and learn. That spend time for them to learn, and that is the extra cost.
Right.
So if you have a company that's doing audit and tax together,
Yes.
okay,
Easier.
then it is easy because they are their own people, okay, own people. So it will can be cheaper. Now, because based on the Company Act and also governance, okay, your audit firm is one company. The tax firm is another company. Maybe your audit firm is Rahim and Co. And your tax, even though they are related, must be another company. They must be, for example, Rahim and Co. Accounting. They may be one Rahim and Co. Tax. Different company, cannot be same company because it's treated as conflict of interest.
Oh, okay.
Therefore, there will be different company, but they are the same people. So when you go and talk to your auditors, I don't know who is doing your tax. If you're having a different company, it's better to have the same company because they are their own people. They have access to their own documents. They can do it the tax easier.
Yeah.
Okay?
Okay.
So these are some of the practical things. If you don't ask me, I won't tell you. I don't know what you like. Is there anything else? See, I tell you, you have attended my class before, one.
Yes, I did. ODL, sir. The first and the second class.
What subject?
MBA.
Huh? What? IPA?
MBA.
Yeah, MBA. What subject?
The subject was the accounting and finance.
Okay, next one.
What did we?
Only about last month, isn't it?
Yes, yes. So we did the business accounting and finance, and then
business ethics.
Yeah.
Okay. So today my class, you notice, it's a little bit different from the MBA business and finance.
Right, right.
Well, today, yeah, because that one is based on the Ministry of Education, based on that syllabus. Okay. But today class is a practical class.
Yeah.
So it's a little bit different. Okay.
Yeah. It's useful. Thank you so much.
Okay. So Your next class is 6 o'clock. For even the normal MBA class, I'll try to put in practical,
Right.
right? Okay. The main aim of business, first aim of business is always profit.
Right.
No money, no talk.
Yes.
Yeah. So with profit, you can pay more salary, you can do more good work, social responsibility or whatever, buy a car, whatever it is, right? So if you go back, how to make a good profit, look at how I explain budgeting.
Mm-hmm.
Your budgeting must be based on your objective.
Mm-hmm.
Your objective must be based on your OTSW.
Mm-hmm.
Okay, do your OTSW. You don't have to be every January you must do. No, whenever you find that something changes, new competitor come in or drug price going up, you have to relook again your OTSW. But one thing I
Okay.
say is your objective cannot simply change, because if your
Right.
objective ding dong here, ding dong here all the time, right? It shows that in the first place you do not do correctly your corporate strategies.
Mm-hmm.
That's one thing.
Mm-hmm.
And therefore you need to learn how to make a good objective. There's no formula. I can only teach you the outline. You
Right.
have to practice by yourself.
Okay.
Okay, and the
Understood.
more
Yeah.
you practice, the better you become.
Yes.
So I hope you understand what I'm trying to tell
Yep.
you.
Yep. Got it.
So we will, okay, no issue.
Okay. No issues. Yeah. Good.
Okay, no theory. Okay, not so much theory, real actual practical. Okay,
Yes.
okay then. Okay, bye bye
Okay.
then.
Thank
So
you,
I see you
Mr.
next week.
Chia. All right. Okay. Take
Okay,
care.
bye
Bye
bye.
bye. Thank you.
Sorry. I will stop recording now first. Hang on.